All right, that's global market action, but how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup look like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. I'm sure you all are in the holiday mood already, but we have to talk about markets. So Vivek, let me come across to you first. What is the market setup for the last trading day of 2022 looking like?
Absolutely. Good morning. All of us looking forward to the break. It's the last trading day. And, hopefully no nasty surprises in today's trading session. Overnight cues are looking quite good. And, this is something that markets will take quite a bit of, heart from. So most of the U.S. indices in yesterday's trading session, albeit on thin volumes, actually saw a little bit of a rally. However, despite this particular rally, U.S. indices are all set to, close 2022 and see the worst year since 2008. Most of the U.S. indices, like we mentioned, gained. The Nasdaq gaining over 2.5%. European indices too, gained, and while the rally wasn't as sharp as the U.S. markets, did end up with gains between 0.2 to 1%. Crude prices continued to dip, this on the back of an uncertain demand outlook, especially as the China open up continues to linger. So Brent futures down almost 1.2%, closer to $82.26 a barrel. WTI futures fell over 0.5% to $78.4 a barrel. Now, yesterday's market, Indian market, staged a very sharp recovery, like you mentioned, especially in the second half of the trading session. So, it'll be interesting to see whether that particular rally continues, especially given the backdrop of a good overnight cues that we've seen. And as you mentioned, very important to see how markets start off the January series, and that will be one of the most important things to watch out for. Asian markets indicating, a positive start, and LGX Nifty 2 is indicating a gap up open for our own markets.
Okay, all right, Vivek, thank you so much for that. So that's about the market setup. But in a market like this, Surbi has been able to point out some stocks that are making news. Surbi, over to you.
Hi, thanks for that. So I have a few stocks on my radar. The first one is Reliance, where Reliance Consumer Products, a wholly owned subsidiary of Reliance Retail Ventures, is going to acquire 51% stake in Lotus Chocolates. It will also make an open offer to acquire up to 26% stake. Eicher Motors, where they announced strategic collaboration in e-motorcycles with a Spain-based company, Stark Future. Eicher Motors will invest 50 million euros for 10.35% stake in the company. SBI Cards and Punjab and Sind Bank, where they launch co-brand credit cards with Punjab and Sind Bank. Craftsman Automation, where the company is going to acquire 76% stake for DR Axion India for 375 crores. And lastly, Saturn Credit Care, where the company receives second tranche of 25 crores from Florentry Advisors.
Okay, all right, those are all stocks that will be in focus today. Finally, let me go across to Mangalam. Mangalam, the Santa Claus rally, as our US colleague said, came in a little late, but it has come finally.
It has come finally, and it has come on the last day of the December series. It was a dramatic recovery that we saw in trade in the second half. In particular, a large part, of course, was on account of short covering because of the call writing that we saw yesterday. But that was about yesterday, and today we're likely to see, trading on thin volume. So let's talk about January itself, because we are saying hello to the January 2023 series. January usually hasn't been a series of big moves because, the average move of the last 3 or 4 series has been just about 0.5% odd. If you just take a look at, the way December panned out, we were lower by almost 293 odd points. This after gaining almost 1,700 points in the previous 2 series. If you just take a look at, the way the markets have moved, we saw a big move of almost 900 points in October, 750 points in November. And as we speak, the rollovers were largely in line at 79% for both the Nifty as well as, the indices that we're talking about. 79% versus the 3-month average of 79%. What, however, stands out is that the FIIs have started, the January series with 1.05 crore shares in open interest, which is mildly lower than the 3-month average of 1.1 odd crores. 57% is the long exposure that the FIs have at the start of January series, and that is something that may make bulls a little happy because now we have some shorts in the system. We started December series with 77% longs, so there was no counterbalancing trade, and we saw the drubbing that we did. In October and November, when there were more shorts in the system, we saw a bigger move because these shorts, obviously, when they run for cover, that provides fuel for the market. But the real fuel for the market would be the cues for January series. What are the cues that we're watching out for? The biggest one, of course, will be the results season and management commentary that begins next week. Before that will be, of course, the pre-results quarterly updates. Pre-budget expectations is something that we'll be watching out for because remember, Feb 1st is the budget. from 15 Jan onwards, we start getting some chatter around it. And also watch out for China and COVID-related updates coming in out there, because that caused a fair amount of volatility in the second half of December in particular. And finally, we aren't yet out of the woods when it comes to the global central bank action and any sort of commentary coming in on inflation. So those are a bunch of things that I'll be watching out for.
Okay, all right. Mangalam, Vivek and Surbhi, thank you so much for joining us and prepping us up for this trading day ahead. Let's slip into a break. Up next, India's current account deficit spikes to a 9-year high at 4.4% of GDP. Details after this short break. Stay tuned. Welcome back. While the union government is planning sweeping changes to the insolvency and bankruptcy code, sources say the bankruptcy process could be split into two to ensure quicker resolution and fewer litigations. Sapna Das is here with more details on what she's picking up. Sapna?
Well, the government may have certain significant amendments in mind to the IBC. What could be under discussion is as follows. Number one, probably structuring a resolution plan in two parts, basically the bid and the distribution of money. Here, probably the suggestion is that the adjudicating authorities should give a quicker approval to bids once they come in from the COC. This will help the new promoter come into the picture immediately and not wait for the distribution of money to actually start. The money that's undisputed can be given out to stakeholders in the first stage itself, but the disputed part of the money can be kept separately in an escrow account, wait for the litigation to be over, and then that can be taken forward. So this is one. Second, introducing a challenge mechanism into the IBC. There has been a lot of discussion on this in the past as well, but not included in the law so far. So there is a serious consideration that this should be made part of IBC. This will help cut delays and also maximize the value of potential bids. Last but not the least, also, probably the government will need to clarify on the immunity already granted to new promoters under IBC. In the past, some courts have allowed fresh proceedings, legal proceedings against the new promoters. So this has raised questions in the minds of potential bidders. The government will need to clarify on this once again, because that will be very important and significant in giving comfort to potential bidders to come forward, to salvage companies under IBC. These are some of the proposals that we are given to understand. We have to wait and watch and see how all of this pans out.
Okay, Sapna, thank you so much for joining us with those important details. Moving on, months after Maiden Pharma, another Indian pharmaceutical company finds itself in the dock. The Uzbekistan Health Ministry has claimed that 18 out of 21 children who were administered a cough syrup manufactured by Indian company Marion Biotech died. The Uzbek government alleges that Doc 1 Max, the cough syrup, was allegedly contaminated with toxic substance ethylene glycol. The Uzbekistan government also claimed that the syrup was given to children without a doctor's prescription, with doses that exceeded the standard for all children. The legal head of Marion Biotech has said that they would extend full support to the government inquiry. Abhimanyu Sharma filed us this report.
2 rounds of inspection have already been completed by officials from CDS-CEO as well as the UP Drug Control Department. The samples which were taken have been sent for further testing to the Regional Drugs Testing Laboratory in Chandigarh. CDS-CEO is also in contact with the Uzbekistan-based drug regulator, and WHO is in contact with Uzbek authorities. The company so far has stated that it has already stopped the production of the stated cough syrup and is fully cooperating in the investigation. It remains to be seen what are going to be the results of the collected samples, based on which any further action will be taken either by the union government or by the UP state government. Till now, the Uzbekistan authorities have already stopped the circulation and sale of the stated cough syrup, claiming that it had a huge presence of ethylene glycol, which is a poisonous compound, and it led to the loss of lives of children in the country. It remains to be seen what are going to be the results of the collected samples, based on which any further action will be initiated. In Noida with video journalist Nitin Trivedi, this is Abhimanyu Sharma for CNBC-TV18.
Okay, on that note, let's also listen into Arindam Bagchi, the spokesperson of the Ministry of External Affairs, as he speaks on this matter.
Uzbek authorities have not formally taken up the matter with us. Nevertheless, our embassy has contacted the Uzbek side and is seeking further details of their own investigation. And of course, we understand that legal action has been initiated by the Uzbek authorities against some people, including the local representative of the company there. And in that context, of course, we are extending necessary consular assistance to those individuals or individuals.
Okay, this is a developing story and we'll keep getting you updates on this one. But of course, the big story this morning is India's current account deficit touching a 9-year high of 4.4% of GDP in the July to September quarter of 2022. This was mainly due to a sharp rise in the merchandise trade deficit in those months. Lata is joining us with her take on this one. Lata?
At $36.4 billion, this is the highest ever. But more importantly, as a percentage of GDP, 4.4% is a 9-year high. The last time we saw it was in 2013, first quarter, Jan-March. This is caused primarily by a huge rise in imports, 30% rise in imports, whereas exports have risen by only 16%. Let's not assume that it is all oil, because non-oil imports also rose by 25%. We have a problem there. Services, now what's done well? These were the things that caused the problem. What's done well? Services exports grew by 30%, largely software, and Indians living abroad and transferring money, that kitty also grew by 30%. So good going over there. Now the current account deficit has to be financed. It gets financed by FDI, a foreign portfolio. FDI also fell. It's $2 billion less than what it was a year ago, 6.4 versus 8.7. External commercial borrowing loans taken by Indian corporates also finances, that was nil in this quarter. And that is understandable because there is global tightness and the euro-dollar market is hardly working. So as a result, we have a balance of payments deficit of 30.4 billion. Last year, same quarter, it was a balance of payments surplus. This year, it's a deficit. We rarely have these deficits. Now, let me also give you the good news. The good news is on the previous quarter. April, May, June quarter, we were originally told that the deficit is 2.8% of GDP. Actually, the current account deficit has been revised lower to 2.2%. And that's because the April-June imports have been revised a good 6 billion lower to 185 billion from earlier 191 billion. So the earlier trade deficit was, for the 3 months, was 68 billion. It's now actually 63 billion. So the first half CAD now that we have Q1 and Q2 works out to 3.3% of the GDP. This is still bad. You know, anything over 2.5% to 3% we consider a worrisome. So it is a 9-year high. However, economists tell me that they expect the second half CAD to come down a bit, but 3% and above, it's likely to be, they say.
All right, so that's the big number that we are looking at. Lata, thank you so much for making sense of this current account deficit number that we got. With that, we'll sip into a short break. Up next, we'll get you all the cues from the commodities market. Stay tuned. Welcome back. Still tuned into Power Breakfast here on CNBC TV18. While we spoke about equity markets and what's happening as far as macros are concerned as well, let's talk commodities now. Manisha Gupta is joining us now with all the updates. Hey Manisha, good morning. In the holiday mood today?
Oh, absolutely. It's the last day of the year, and you know the volumes are absolutely on the weaker side. I don't even know why the prices are moving. But starting with the crude oil prices, and the concern here is that more and more countries are now considering restrictions on China travelers. We already have seen that come in from US, India, Taiwan, and Japan. They have put restrictions on Chinese travelers coming into the country, and UK is now considering it, and the crude bulls do not like it. Apart from that, the US crude inventories also are rising. We have seen the crude imports climb into US and exports decline. So yes, the world is slowing down, and that's showing in case of the crude oil prices also. Also, when you look at supplies, the Keystone pipeline is now fully operational, and that's weighing onto the markets as well. Take a look at the natural gas price. We are now trading below $5 per MMBTU. This is a 9-month low. Prices are still 30% up in this year because the gas movement, the concerns have been all over the place. But at this point in time, it is a lower heating demand forecast for early part of January that's weighing onto the markets. Also, the Freeport, Texas will restart operations in the second half of January. So still a lot happening and expected as we start into January. But as of now, it is exaggerated moves and very low volume.
Low volumes, exaggerated moves. That's the story across the board, right? Manisha, thank you so much for joining us. That's the update coming in from the commodity markets. Moving on, India has imposed mandatory COVID tests for travelers from China and a few countries due to rise in COVID cases. The union government has made RT-PCR tests mandatory for travelers from China, Hong Kong, Japan, South Korea and Thailand. The travelers who test positive or show symptoms will be quarantined. India is not alone. The US and a few other countries have imposed restrictions on travelers from China, but many others have not imposed any curbs so far. Danish Anand is here with more details.
With the resurgence in COVID BF7 variant in China, countries like US, Japan, South Korea, Taiwan, Italy and India have announced various measures for international travelers. Passengers coming from China to Japan will have to submit a negative RT-PCR report from 30th December. Similarly, the United States has made COVID tests mandatory from 5th January for travelers entering the country from China, Hong Kong and Macau. Italy and South Korea have also announced that all passengers from China would be tested for COVID. In Taiwan, people arriving from flights or boats from China will have to take COVID tests on arrival from 1st to 31st January. India had previously announced random selection of 2% of international passengers on a flight for COVID testing, but the Indian government has decided to make negative COVID test reports mandatory for travelers coming from China, Singapore, Hong Kong, South Korea, Thailand and Japan. However, there are still many countries like UK, Australia, France, New Zealand that have yet to take a call on fresh restrictions. Health Minister Mansukh Mandavia held a meeting with pharma manufacturers to review availability of medicines and vaccine stocks in the country.
Okay, Danish, thank you so much for joining us with those details. In some cheerful news, Anand Ambani, the youngest son of Mukesh Ambani and Neeta Ambani, got engaged to Radhika Merchant today. The ceremony took place at the Srinathji Temple in Nathdwara, Rajasthan. Anand serves on the board of Jio Platforms and Reliance Retail Ventures. Radhika serves as a director on the board of Encore Healthcare as well. Okay, with that, we move on to some somber news. Legendary Brazilian footballer Pelé passed away last night at the age of 82. The three-time World Cup winner was suffering from cancer and was receiving end-of-life treatment in hospital. He was the only person to win the World Cup 3 times and is also the joint highest top-scoring footballer in the World Cup. As tributes pour in for the legendary footballer, the iconic Wembley Stadium in London was lit up in Brazilian colours, and the government has declared 3 days of national mourning in the country. And in some more sad news, Prime Minister Narendra Modi's mother, Hirabai Modi, has passed away at the age of 100. Tweeting a photo of his mother, who died at a hospital in Ahmedabad in the early hours, PM Modi said, "A glorious century rests at the feet of God. In Ma, I have always felt that Trinity, which contains the journey of an ascetic, the symbol of a selfless karma yogi, and a life committed to values." Condolences poured in from across political parties following the news. The PM has left for Ahmedabad for the final rites. All right, with that, we'll take your leave on this edition of Power Breakfast. Stay tuned, Bazaar Morning Call comes up next.